introduce Rita Mazaleskis.
Thank you.
So the other question that I had was about risk to the bank. This one is risk and risk management within the bank, and it's included in the annual report. The report discusses conduct risk could occur through the provision of products and services to customers that do not meet their needs or do not meet the expectations of the market, as well as the poor conduct of our employees, contractors, agents, authorised representatives and external service providers. This could occur through a failure to meet professional obligations to specific clients, including fiduciary and suitability requirements, weakness in risk culture, corporate governance or organisational culture, poor product design and implementation, failure to adequately consider customer needs, or selling products and services outside of customer target markets. This could include deliberate, reckless or negligent actions by such individuals that could result in the circumvention of our controls, processes and procedures, and we depend on our people to do the right thing to meet our compliance obligations and abide by our code of conduct. And it says inappropriate or poor conduct by individuals, such as not following a policy or engaging in misconduct, has resulted and could result in poor customer outcomes and a failure by the group to meet our compliance obligations. Then within the strengthening risk under management, it says a focus of our fixed strategic priority is improving the group's risk management and culture. This involves avoiding mistakes, minimising customer remediation and improving the way we address issues and manage complaints. And that changes are being driven through our customer outcomes risk excellence program. So just quickly thinking about the new CRO, Ryan Zanin, the report does say that his role has combined the CRO and Group Executive Financial Crime Compliance and Conduct. So he covers the whole lot. You might recall last year I asked about a question where what happens when Westpac gives a client or a customer an unsuitable or incorrect loan, and the significance it has to borrowers and the losses and harm that it causes them. And Mr. King actually mentioned that it sounds like an issue in the past. Well, it's not an issue of mine, but I'm aware of some customers who have this issue. It's not an issue of the past. And I'm just concerned about Mr. Zanin's role if he's the CRO, which incorporates the compliance and crime issues. Is that not a conflict to, given that these issues for your current customers haven't been addressed and the bank is not helping these customers where they've been given wrong products and the products that are put in place, they can't do anything about it. It's up to the bank to rectify what they've done. Doesn't it cause a severe conflict of interest to have someone in a role that combines those two significant positions together when there are outstanding known issues within the bank?
Okay, I'm going to pass this to the Chairman of the Risk Committee and to the Chief Executive, but I'll make 2 points.
Yep.
One is the primary responsibility for handling those matters are the executives in the front line. Mr. Zanin is the head of the second line to make sure these things are controlled. And therefore there isn't a conflict of interest there. Secondly, those roles are normally combined if you look at the banks globally. So there's nothing unusual about the way we've structured it. But let me pass it to
I'd just say
colleagues.
on the 2 customers or a couple of customers, Rita, you have my email address, so send me the details and I'll get someone to review the cases. And the only other point I would add to the Chairman's point is it's not unusual for the CROs in large financial institutions to look across those roles, given the second line nature of the role, not independent but separate to the businesses.
Okay.
The conflict of interest would arise if he was the first and the second line. That would be a serious problem.
Or
which
maybe
we
he
don't know.
doesn't know about the issue because the people, the next level down, haven't passed it through to him.
He's pretty smart. He's got lots of information.
Well, you would hope so.
Yeah, indeed. Peter Marriott.
If we've paid that relocation and he's on a good salary.
Peter, it's worth it. Peter Marriott.
Thank you, Chair. I don't think there's much more I need to add, but this bank did have instances in the years gone past, and we've paid over $2 billion of remediation to customers where the product governance processes didn't work. And so that's why we've been putting a big focus on making sure the controls are stronger. And for a while there, we had two executives running risk because of the major problems we had to sort out, and now we've combined because we've got back to a more stable platform where we have more confidence in the controls we have in place. But it remains a key focus because making sure we deliver for our customers what we promise to our customers is very critical.
Okay, thank you.